Hello everyone. In this video I'm going to explain to the accounting equation and the balance sheet as simply as possible. Okay, so the accounting equation, which is the foundation of financial accounting, is based on a very simple idea, which is everything a business owns belongs to someone. Okay, so if we take the value of the assets that a business has, and these are the cash it has in the bank, the building, the equipment, and so on and so forth. If we add the value of all of these items, and on the one hand, and on the other hand, we add the values of all the commitments that this company has to owners and non-owners, and we will see a detailed breakdown of these. Then these two values must equal, right? In an extreme case, if a business liquidates and you convert everything into cash, then the value, that money has to be split up between people, right? There wouldn't be any money left without anybody claiming that this is his or hers. And based on that, accountants say assets must equal liabilities plus owner's equity. So assets in this equation is the value of the resources under the control or ownership of the business must equal the commitments the business has to non-owners and plus the commitments it has to the owners of the firm. In a more detailed way, okay, so let's talk here about the assets of the firm. What are these assets? We can have cash. A firm certainly controls a certain amount of cash, but firms don't like to hold a lot of cash, so they convert some of this into investments. Some of these are highly liquid investments, others are less liquid investments, and we can discuss this all in detail later on. But basically, highly liquid investments are things like very short-term treasury bills or certificates of deposits. And longer-term investments include things like stocks and bonds in other firms. What other assets does a firm have? A firm has money that customers owe to it because it has already provided services or delivered goods to them. So these are part of the assets of the firm. We call these customer dues. Okay. In addition, a firm has inventory, raw material inventory, work in process, finished goods, merchandise inventory, all kinds of inventory, office supplies, and so on. These are parts of the assets of the firm. In addition, a firm, technically, when a firm pays in advance, that money is still the firm's money until the suppliers provide a service or deliver some goods to the firm. The same thing when a company prepays some of its taxes, then that's kind of money owed by the government to the firm, and we'll see this in detail later. A firm certainly has plant, property, and equipment that it owns, okay, where it manufactures the product, where its offices are, different kind of equipment and machinery. In addition, a firm has what we call intangible assets, such as patents, trademarks, goodwill, and so on. And the value of all of these assets must equal the claims by the stakeholders, right? So again, if a firm liquidates and all of this becomes cash, that value will be distributed to people and organizations, right? Different kinds of institutions, different stakeholders who have claims. It makes sense that these would equal. And in accounting, we make sure that whenever we record business transactions, we keep this balance, because we don't want value in assets that doesn't have a corresponding claim by some stakeholder. So who are these stakeholders? Again, if a firm liquidates, then you would expect that the suppliers would have a claim on some of the value of these assets. The suppliers who have extended credit to the firm, who have supplied goods and services and haven't been paid yet. The bank that has extended credit to the firm would also have a claim on the assets of the firm. The credit card company, again, it has basically loaned the firm money, and that money has to be paid back. Customers, if they have paid in advance and haven't received any goods or services yet. Bondholders, again, these are basically creditors of the firm. Employees who have worked for the firm and haven't received money for that work yet. Different kinds of employment agencies that collect, for example, payroll taxes from the firm. These have claims. Other tax authorities. And certainly the owners, whether they are members of the public or investing in institutions. Okay, so again, it makes sense that the value of these resources equal the claims by these stakeholders. Okay, now in accounting, we change these into certain terms and we call them accounts. So we have cash and cash equivalents. These are very liquid, highly liquid investments. Accounts receivable. This is how much money your customers owe you. Inventory, different kinds of inventory. Short-term investments, long-term investments. Prepaid expenses. That's when you pay your suppliers in advance. It's still your money until they deliver their the goods and services. Deferred income taxes. That's again, you have already paid some taxes, and you might ask, when do I prepay taxes? We're going to talk about that later. Okay, but it happens that you actually pay some taxes in advance. As far as you are concerned, you consider that these have been prepaid. In addition, property, plant, and equipment, basically the same term we used earlier. Longer-term investments, long-term receivables, that's money that you expect to collect from your customers in more than 1 year. Intangible assets, okay? So these are the assets. These terms are closer to the account titles that we use in accounting. And on the other hand, the commitments that a firm has to its owners and other stakeholders are, we usually use these terms when we talk about these commitments, and we call them liabilities and owners' equities. So we have accounts payable. That's again the money you owe to your suppliers. Notes payable. That's the value of the credit money that you owe to different banks, for example, or other credit institutions. Credit card liability. Unearned revenue. That's the money that your customers paid you in advance. Salaries and wages payable. Right, this is the money you owe to your employees. Payroll taxes, you owe these to employment agencies. Taxes payable, you owe this basically to the government or to the federal government or to the state. Bonds payable, you owe this to bondholders. Long-term debts, and finally capital and retained earnings, and this is basically the money you owe to the owners. Either as a result of their own capital investment in the firm, or because the firm has been making money, right, and that profit has been accumulating, so we call that retained earnings. So this side, the assets, their value must equal this, right? Liquidate the firm, turn this into cash, somebody will come and say this is mine. It's not like the bank will say, well, your office is mine, unless there's a contractual agreement with the bank to foreclose on the office if you don't pay, or in the case of liquidation. But at least the value here, when we add up all of this, must equal the values when we add up all of these. Okay, let's look at an actual balance sheet. This is actually Microsoft's balance sheet as of June 30th, 2014, and these numbers are in millions. So this would be 8 billion. Okay, so let's look at Microsoft's assets on that day. Microsoft had cash and cash equivalents of $8,669 million. Short-term investments, less liquid than cash equivalents, 3 months to 1 year. That's the usual accounting um, criteria that we use to label something as short-term investment. That's $77 billion. Again, companies don't like to keep a lot of money as cash because cash doesn't work for you. There's no return on it. It just probably depreciates in value because of things like quantitative easing. Net accounts receivable. That's actually the money the customers of Microsoft owe Microsoft, net of an allowance for doubtful accounts. So the amounts you report here, accountants make sure that they are reasonable and that they take into account potential problems like customers not paying. So we don't want to be too optimistic and say, well, all our customers will pay. We deduct a certain percent of our sales. That's one possible way to account for this. And we say this money is probably not going to be collectible. And we come up with this number for net accounts receivable. This is the value of Microsoft's inventory. Now remember, Microsoft, in addition to selling software, now it's acquired many firms over time, right? It certainly sells Xboxes, right? So these are included here, whatever is on stock. And of course, I think they've also acquired Nokia, so Nokia has a lot of inventories, and that money would be included here. Okay, then we have deferred income taxes, other current assets, right? So companies can't just list hundreds and hundreds of accounts, so the less significant ones are grouped together. Okay, and here we have the longer-term assets, the assets that are expected to stay with the firm for a longer time. So we're going to differentiate them with a darker color. We call these current assets. We call these long-term assets. So here we have the property and equipment, net of what? Well, net of depreciation. We kind of take a charge. We reduce the book value of property and equipment as we use them. In addition, we have non-current investments. Again, these are investments in stocks and bonds of other firms that the company intends to hold for a longer period of time. Goodwill. Okay, so when Microsoft acquires a company and it pays more than the assets, more than the fair value of the assets of that firm, that money has to show up on its balance sheet. It's categorized as goodwill. The fair value of the other assets is combined into the assets of Microsoft, but what Microsoft has paid above that will be considered goodwill. You don't have to worry about this so much. It will become clearer later on. Other intangible assets, patents, for example, that Microsoft will have acquired, and other long-term assets, again, lumped together in one number, so the balance sheet becomes clearer and more manageable. Okay, so the assets of Microsoft added up to $172 billion, $384 million. Okay, if Microsoft were to be liquidated, and let's assume that it actually sells these assets for their book value, which is unlikely, but that is a completely different story. But let's take this hypothetical situation. Microsoft liquidates and it sells all its assets at their book value. We have $172 billion plus in cash. This money belongs to someone. It has to be divided among the stakeholders. So in this case, the suppliers would get their $7 billion plus. Short-term debt. So Microsoft owes money in the form of debt that it has to pay within 1 year, and that's $2 billion. So that's a claim on these assets. Accrued compensation. This is basically what Microsoft owes its employees. Current taxes payable. What Microsoft owes different tax authorities and expects to pay within 1 year. Short-term unearned revenue. So that's money extended to Microsoft, paid in advance by its customers, and the company expects to provide services or goods to these customers within 1 year. Other current liabilities. We call these current liabilities of the firm because they are expected to be satisfied within 1 year. Then we have long-term liabilities. These are obligations that the firm expects to settle in more than 1 year. Long-term debt, long-term unearned revenue, deferred income taxes, other long-term liabilities. Okay, now you might be asking, well, how much does Bill Gates have in terms of a claim on the assets of the firm? Well, the owners of Microsoft have this as a claim. Okay, so certainly there is a claim by the owners of the firm on the assets of the firm. And these are usually categorized as common stock and paid-in capital for a corporation. So this is actually the money that the company has acquired by issuing stock. In addition, the company has has made profit over time. Microsoft is a highly profitable company. Most of its revenues and expenses are accumulated in retained earnings. Some special gains and losses are accumulated as other comprehensive income, right? And the value, the sum of these numbers gives the claims, the book value of the claims of the owners of Microsoft on its assets. Okay, so to wrap up, in this video, I explained the accounting equation and the balance sheet, and I provided a sample of a balance sheet for Microsoft to clarify the basic principles underlying the accounting equation and accounting in general.